We have Chirag Sethalwad, who's Senior Fund Manager Equities at HDFC Mutual Fund, joining us right now. Chirag, it's good to have you on the show. First up, what's your view on the market from a near to a medium-term perspective? There's opinion that there will be a very strong rebound in the second half of this year. Do you concur with that view?
We remain positive on the market from a 2 to 3 year perspective. Today the market is trading at 12.5 times 1 year forward earnings, which is at about 15-20% discount to what it has traded at historically. So we feel over a period of time there is an opportunity not only to capture earnings growth but also to capture an improvement in valuations over a medium-term perspective. So we remain quite positive on the market.
Right. Where do you see opportunity in the market right now? Large caps or mid caps? Momentum essentially, or the more defensive plays in the larger stocks?
We feel the market is going to be very selective going forward, very stock specific. There are opportunities both on the large cap as well as on the mid cap side. I run the HDFC Mid Cap Opportunities Fund, and we are finding selectively a fair amount of opportunities on the mid cap side.
And is that the broad portfolio strategy, be stock specific? I mean, what is it that you're doing to your portfolios over the last, say the last couple of months?
We look at companies at a very, from a stock-specific perspective. We build up our portfolio on a bottom-up basis. While we do take into account, of course, the macroeconomic variables, our focus is very much on individual companies and the prospects of those businesses.
Okay, in which case, let's drill it down to specifics. You manage the Mid-Cap Opportunities Fund at HDFC, where you have exposure to financials. But I believe you're underweight on autos, with the exception of auto ancillaries. Why is that?
Sure, we remain very positive on banks. Public sector banks in particular are trading at anywhere between half times book and 1 times book. We feel the valuations are very attractive. There is a lot of stress on asset quality today, but we feel that will improve over a period of time. We feel banks can give a good return over a 2 to 3 year perspective. Selectively, we're positive on pharmaceutical stocks, auto ancillaries, and industrial products.
You have stated in the past that you avoid flavor of the day ideas, so to speak. Are power, infrastructure, aviation, retail, even for that matter education, broadly the themes that you would avoid in this market?
Well, typically flavor of the day ideas tend to be very expensive, and we would like to buy high quality companies at reasonable prices, and flavor of the day ideas tend not to fit into that profile, and we tend to ignore them. Of course, flavor of the day will change from time to time, so what was flavor of the day a year ago will not be flavor of the day today. But in general, yes, you will find us avoiding flavor of the day ideas.
30% of your mid-cap portfolio is financial and healthcare. What opportunities are you looking at in the healthcare space? I mean, is it generics, patents, research, or the hospital space? What is it that draws your interest when it comes to the entire healthcare sector?
Sure. On the pharmaceutical side, on the domestic front, we are expecting the industry to grow anywhere from 12 to 14%. And each company has a very different profile in the pharmaceutical space. There are some companies which are more domestic oriented, there are some which are more research focused, some which are more internationally driven. But we feel that there is a lot of opportunity, particularly in the developed markets, as products come off patent. India is growing at 12 to 14%, and there is a fair amount of opportunity in India as well. Companies are reasonably valued by and large, and therefore we are quite positive on the healthcare space.
In IT too, Chirag, I mean, I was just looking at, again, your portfolio. Mid-cap IT has done very well, but it's an underweight for you. Why?
We have added to our exposure to mid-cap IT. We are finding that area to be more interesting now. There is some pressure from a demand perspective. There is also some benefit which is coming in from the rupee. We are now turning a little bit more positive on mid-cap IT.
Okay, so just before we wrap up, amongst the large caps, we've spoken about mid-caps, amongst large caps, are you looking at taking contrarian calls, or would value-driven calls essentially be the order of the day?
Large caps is a combination of a variety of factors, but it includes, as you mentioned, contrarian calls as well as value-oriented calls. So it's a combination of a variety of different types of businesses. We are finding selectively contrarian calls in industrial companies, capital goods and industrial companies.